could be a fire where just a portion of your home is damaged.
Right.
And needs repair. It could be a loss where that fire takes out your entire home. All right? And so as a result, the insurance is what's going to help you replace that asset and replace that property that you own. For the bank's purposes, you absolutely have to have it. So if you have a mortgage on a property, then 100% sure that you'll have to have a insurance policy.
Mm-hmm.
What's his name, Reginald?
Mm-hmm.
Reginald mentioned that his bank, it requires at least 80%. So what we'll actually come up with is what it's going to cost to rebuild that structure. That's first and foremost.
Mm-hmm.
So you have a fire, your entire home is wiped out. Well, the insurance policy's purpose is to be able to rebuild it from scratch.
Okay.
So it doesn't matter what you pay for that house. It doesn't matter what the market value is for that house, because the cost to rebuild, more often than not, 9 times out of 10 is going to be a different figure. So you pay $100,000 for the house, it could easily cost you $200,
Right.
$250 to rebuild. Does anyone know why that is? Absolutely. So we ask you all kinds of questions. When you're coming for a homeowner's policy, we're asking you what the structure is built of, and we'll go onto a website. We'll get a lot of information for you, so you don't have to rack your brain trying to remember. Okay, do I have a solid brick home? Do I have a frame structure? Is my basement built on concrete? Built with concrete stone? You don't have to worry about all that. We'll do all that for you. But we will ask you questions such as how many bedrooms do you have? How many bathrooms? Have you built onto the home? Do you have a finished basement? What type of roof you have? Flat, angled? If you have railings, that's one of the things we look for. And actually, I'll make that a separate piece of the presentation where we actually talk to you about what some of the requirements are. But in general, we need to know the square footage, number of stories, if there's a finished basement, what the home was built out of, and in the event that we need to rebuild it, what materials we need to be using. Because ideally, we'd like to use what materials went into that property. Obviously, if those materials are no longer available, we're going to use the next best thing. If you pay for replacement. So I know Reginald talked to you about that a little bit. Some of you just walked in. Replacement is we're going to rebuild with the materials that went into the property. We're also going to give you back the replacement value of your personal belongings. Your clothes, your furniture, your electronics, your appliances, all those good things.
So how are you able to attach a value to that? Some of the things, like your electronics, you may have sales receipt or something like that, but other things like your clothing, people dress at different, some people want everything, that's designers, others do not care.
Right.
Okay, so how are you able to put a price or a percentage
on those items? And that's a very good question. The bottom line is the homeowner's policy, at least that State Farm offers, it's automatically calculated at 75% of what your structure is covered for. So if we come up with a figure and we say it's going to cost $200,000 to rebuild this property, well, it's automatically covered all your belongings for $150,000. So now it's up to you, though, to take pictures of all of your belongings, do a personal inventory if you absolutely can, where you literally write down everything, just so you're not racking your brain trying to remember what did I have. And during a claim process, you're not calling claims every, say, month after the claim to basically say, you know what, I forgot I had this, I forgot I had that, and I had that branded item that cost me, I thought it was $70, but I found the receipt, it was actually $100. So keep any important receipts. If you don't have a receipt, it's pretty much an honor system, but they will ask you to shop that item. So say you lost $2,000 flat screen TV. That model may not be available today, that exact model number. However, you can shop online and find the next best thing and provide that to the claims area. So it's up to you to literally have down to a T, especially for those items that are valuable to you, that if you had a loss, you'd absolutely want those things replaced.
But it's still gonna just be 75% of the structure, right?
That $150,000 is automatically calculated, and so if you absolutely have more than that, then you absolutely need to let your insurance agent know. Most people will say, oh wow, that's a lot. I don't need that much coverage of my personal belongings. But you'd be surprised how much stuff adds up
Over the years, yeah.
over the years. And when you think about shoes, and you think about suits, and you think about pants, they're not cheap anymore. Not that they ever were. Not that they ever were. But if you really sat down and thought about it, you probably do have at least $100,000 easily in a home. And if you have children, you know, all of their belongings, toys, gifts, etc. If you have wedding presents, all of that's going to be replaced if you have a replacement value policy. So speaking of, the dwelling is the first thing, coming up with the cost of the dwelling, so what it's going to cost to rebuild. The bank is only going to be concerned with your coverage amount for the dwelling being at least the amount of that loan. So if you're financing $100,000, if you're financing $50,000, you have to have at least that amount in the dwelling amount. Because their interest in the property is the amount of money that they gave you, that they're lending you. And if something happens, the first thing the insurance company is going to do is pay off that bank. All right, so you can't go to close successfully without a homeowner's policy.
Right.
Reflecting that. All right, so the personal belongings, any questions on, you know, how to kind of document what you have, or?
I mean, like in a period of time, let's just say you buy the house
Right.
10 years ago,
Okay.
and then you have a fire 10 years later. Okay, so what you have in the beginning is not going to be what you have at the time of the fire. And since fires are normally accidents and come very suddenly,
Right.
Does this mean that maybe on every time you go purchase something, you have like a little box with like your receipts, so that you know when, well, if it's a fire, all
Yeah,
that's
fire.
going to be
Well,
gone
fire.
anyway.
Right, and
Okay.
we're talking about how do you protect it. So how do you protect all the things that you've either written down
Right.
or you've taken a picture of? So you don't want to have those items that you know, you don't want that inventory form in your home. And you don't want files of important receipts unless you've made copies of them in the home.
Right.
So what you could do is get a safe deposit box from a bank. Mine cost me $42 for the year. You can keep your social security card, any, you know, important medical information in there, obviously any important receipts that you would like to be able to provide to the claims department in the event of a loss. You can keep, if you did all your pictures on, say, a cell phone and you have that media card that you want to store in there, you could do that. And the